Peter Rose along with Currency Trading. It's early February of 2021, and I'm going to do a rant on profits taking care of themselves. Profits do not take care of themselves. I don't give a shit what anybody says. You know, the standard advice is that you manage your risk and let the profits run, and the profits will take care of themselves because you have no control over the profits, but you only have control over your risk. And I've been a proponent of that, and I still am a proponent of that. The only thing you have control over, absolutely, is your risk. And I've lost a lot of money, you know, not doing that. And I've been very upfront about that in the videos that I've done on this channel about what my particular weakness is and how I'm going about resolving that. I do believe that profits take care of themselves, and there's very little that you can do to coax the price up toward your profit target or have any idea really where it's going to go. Through common sense experience, or common sense gained through experience, you can look at price action and the structure of past price action, and you can sort of kind of take a guess as to how far that price will go. And if you trade as I do, as a momentum trigger trader, then the probabilities go well in your favor that you can say, well, not only is the price, for example, going to go up, you can develop a very high percentage likelihood that that will happen, or determine that. But if you're tuned in to some other characteristics, I've discussed some of those in other videos about price action, you can also say with a certain amount of efficiency that the price has that certain secret magical juju juice that should probabilistically carry it toward that profit target, and it may get as far as that profit target. Let's put some numbers on it. As a day trader, I'm looking at no more than 30 pips as a potential thing to make in the day. In previous life, I've been an all-in, all-out trader. I go in with my position and I pull the whole thing off at the end. I'm beginning to experiment with a little bit of a stage-out process that my friend Langers, the Scruffy Trader, and I have been discussing, and he's talked a lot about that. And he does that in all his videos. He stages out. So I'm kind of working on that aspect. And as I've said before, I'm not as proficient as he is. He's got 20 years of looking at charts. I've only been looking at currencies since 2007 and only had a real live account since 2017, and did miserably with that. But I don't have that insight that gives him the confidence that the price will ultimately get to that profit target, and he's willing to withstand some pullbacks as a result of that. And he and I have been going back and forth over emails, started discussing this. And I just thought, in my previous videos, I've been very adamant that there isn't anything you can do about your profits, or you let them run as far as they'll run. And I've kind of let it go at that. So I didn't want that message that the only thing you have control over is your risk, and you just have to let the profits run, to be the gospel according to what Peter thinks. It doesn't matter a shit what Peter thinks. What's the market doing, and how do we react to it based on our personalities? And after looking at charts for thousands of hours and trading thousands of times in my short career, I'm adamant about that risk control, that loss, and controlling that loss. And that's why I do the short stops. I just don't want to let it run a long time before I go, oh boy, I was wrong. I'd rather find out right away. And when I do that, I correspondingly have a good win to loss ratio, and so those few losses that I take are well made up by the gains. It's only when I let the loss runs that it wipes out all those gains in a good portion of my account. But I do manage my profits. Profits don't take care of themselves, boys and girls. You can't just say, oh, I think, unless you're really, really experienced and you're willing to set your limits and stuff and then walk away from it. Unless you have that capability of really identifying that profit target and have that confidence it's going to get there, you need to manage that profit. So if I see that I'm in profit, I mean, I may stage out. I'm kind of taking this stage out process. I may stage out. Look, if my target is 25 or 30 pips, my expectation is, well, I'm not going to get the whole 25 pip move. I'll get 15 of it, say. And so if I pull part of the position off at 5 pips and let the rest run, hoping to get the 13 on the balance of the account or the trade, I think that's not only managing my risk because I've run the cash register on that 5 pips, but I'm also managing the profit by doing that first stage out. So I'm not letting the profit run. I'm locking the profit. And then once that thing goes up a little bit further, which I hope that my trade entry is good enough, so I'm just not betting that the price is going to go 5 pips. Could go 5 to 10 pips. Maybe it'll go 15 before it starts to retract. Well, as it goes past that 5 pip profit, it goes to 8 pips or 10 pips or something like that. I'm going to move my stop up at least to break even. So at that point, let's say profit has moved up 5 pips over my original 5 pip profit target. So I've run 10 pips. I'll bring it the balance of the trade at least to break even. So if I fall back to 10 pips, I've locked 5 in with part of my position. Now I'm not getting a good reward to risk for that 5 pips. I'm risking. Let's say I'm risking 3 and I make 1. It's kind of upside down, but I made the 1. So you have to look at it that way. Hopefully what happens is that the profit will continue to increase and I can bring the stop up so that I lock the whole position in, or the remaining part of the position for 5 pips. So I grab 5 pips with part of the position, I've let the rest run, and then I've brought my stop up to the point where if the rest falls back, I'll still get the 5 pips. Now I'm getting full money for my risk, but I haven't managed to trade well because I had an extra 5 pips up there or 8 pips beyond that point, and I didn't protect it. I'm going, I don't think it's gonna, I got a 25 pip profit target. You can't just let it run and hope that it gets there unless you're really, really good or you're experienced as a long-term trader. And long-term traders have to let the profit come back and lose that profit. I mean, if you've read anything at all in the literature, you know all about Richard Dennis's turtles and the risk management that they had and the profit management that they underwent. They were willing to let huge pullbacks occur because they were looking for these huge continued movements. Now, that thought process worked then. It doesn't work as well now, simply because there's more people in the market, they're more educated, and these long trends don't really occur unless you're way up on the charts. Trading the weeklies and the monthlies, you might get that kind of trend. But in the general sense of where we're trading at as retail traders, and particularly as day traders, you only get a trend about 30% of the time. So if you're not managing that profit, you're gonna have these normal price action pullbacks as price continues forward in this. Hopefully you're going to get this 30% of the time you're in this run, so you can run that profit to whatever that expected target is that you've identified. But if you're just going to take a trade, and as the profit goes forward, you're just going to bring your stop to break even and let the thing run, yeah, I mean, I think a percentage of the time that's going to work, but I just don't see that happening often enough that your jump ball trades and the few losses that you'll take are going to equate out to a profit. And I have done computer simulation on this stuff, and the computer is able to do it, and I know folks that do it, but I'm not real sure that those of us that are beginners or intermediates or advanced intermediates should be banking on. I think we've got to manage that profit better. I don't think we can listen to this advice from these so-called educational resources that manage your risk, let your profit run, and all the other words of wisdoms and stuff that they do. Follow this bat pattern, or the Rob Booker Fibonacci of death spiral pattern, or whatever else it is that he makes fun of, and I have made fun of in the past that these people do. I mean, I just don't see that. I see all that stuff geared toward risk management, but I don't see it geared toward profit management. And I think intuitively, even the really experienced traders do manage that profit. And I've seen some of the folks that I watch on the videos, and also some of the better books that you read, they say when the price begins to exhaust itself, you get out and you take the profit. And I've always had that in part of my rules of my trading. Identify certain price action characteristics that throw a flag for me, and I get out. Most of the time, I'm wrong in getting out, that the price in fact does continue forward a little bit further. But I'm on the bus to make money, not to watch all my money get pulled back away from me so that I settle for a smaller return on that. I'm in it to win it. I'm in it to make money. And I think because of that, because I have this strong competitive desire to make that money, to maximize that gain, and I have great visions for myself, that also gets me into trouble on the risk management side, because I've had a tendency to discount the negative move of price, and I switch to a higher time frame and go, oh, well, I'm safe because on the higher time frame, I'm within risk reward guidelines. And then when that fails, I go to a higher time frame and I'm okay there. And pretty soon I'm so fucking far out of the money that I don't care, because I've been trading on mini lots and stuff. And as I've done videos before, it's just a pizza to me, and I just walk away and margin call out or lose a huge percentage of my money, which is what happened on this last trade that I've been chronicling in some of the videos that I've done. Took a 16% hit against my account, trade minis. So it's not a really big, it turned out to be a big dollar loss, because I did add a couple of fulls in there, just wrapped up in my own delusional mind. I've worked out the reasons for that, and that's probably not going to happen again. I hope it doesn't happen again. But the whole crux of the issue, the whole thing of the rant is profits don't take care of themselves. You better be willing to manage your profits. Don't listen to these shitheads that say, oh, let it run. You identify your profit target and let it run. No. You got to figure out some metric or some rule that says, I've wrung as much money out of this rag as I'm going to be able to wring out, so I'm just going to get out. And you see that in the better traders who show their trading. They set these profit targets and they get out. Now, whether they get taken out because of a trailing stop or because they go, hey, this thing's running out of juice, doesn't make any difference. That's managing the profit. That's not letting the profit run. That's managing the profit. So I guess I'm still going to say that the only real control that we have on our account is the amount of risk that we take. And that profits do take care of themselves because we don't have any way to increase those profits. We don't have any way to guarantee that they're going to be profits. But the corollary to that better be you manage that profitable position and get out of it when it starts to fade against you, whether a trailing stop or a hard stop that takes you out at some at least other profit target or whatever it is that you're going to do. But don't dance to the tune of the profit's going to take care of itself, meaning it's going to go to the profit target because you're so fucking smart that you were able to identify that profit target. You better be there watching that trade. You better not be thinking that you can do this on carry trades as a day trader, because you're not. I've done that. I've been that route before. I've made a lot of money on carry trades, but I've also lost more by doing carry trades. If you're going to do carry trades, if you're going to have that mindset that you're going to give that price room to breathe to get to your full profit target, you better be willing to do a carry trade. And if you're not willing to do a carry trade, you better be flat at the end of the day, and you better manage your profits. If you are willing to do carry trade, you better not be a day trader. You better not be trading down on the lower time frames. If you're doing carry trades, you better be up on the daily and the 4-hour charts making your trades, because otherwise everything else is all fucked up as to how you manage the pullbacks on your trades. That's my rant for the day. Peter Rose, along with Currency Trading. Have a great day and have a great trading day.